Welcome back. The global markets are showing some signs of recovery. I mean, if you look at the Asian markets, a couple of them are off the lows, and the SGX Nifty as well is off the lows now. So let's see. The markets, of course, have seen a big fall. The US market also had a big decline, but in the last hour there was some recovery. So, and if you're clinging on to any hopes, that is. Sudarshan Sukhani and Mitesh Thakkar joining us now. Gentlemen, good morning. Sudarshan, the Nifty gave up 17,500 rather violently on Friday, and it looks like we'll have a start below that now. There will, in fact, be some cushion below that. Is this now a market for the bears to try short trades on rallies, or is this still largely a buy on dips market?
Yeah, good morning, Anuj. Before I talk about the markets, there are some events which are larger than the markets. So, Dr. S. Jaishankar's speech at the United Nations, I think, made 130 crore Indians proud. It was fantastic. And now we'll come to the markets. I don't think this is a buy on dips market. That much is obvious for you also, looking at the tape, looking at the price action. But it's not a short selling market, which means it's a troubling market. And that happens. I've explained my view many times that once we enter into a correction, corrections are very difficult to trade because corrections are going against the primary trend, which is bullish. Now, how do you actually go short at a 150 point gap down? That's not easy. And we don't know where this gap down will end, so it's difficult to buy. So the best trade is to look for support levels to hold. One such support level will be somewhere around 16,900. If that support holds, and then the market start stabilizing, there would be a buying opportunity. So there are days when there are really no trades, and I'm so sorry, but today is one such day.
No, that's okay.
And that applies to the bank also.
Yeah, I mean, not taking any trade is also a trade, right? Cash is a position. Mitesh, good morning. What is your index trade, Nifty and Bank Nifty?
Morning, Anuj. See, I think when we were correcting, a few weeks back, that was the month of August, towards the end of August, we got an intraday low of around 17,166. And today, I think the SGX is indicating we might open around that area. The 17,160, 150 is a good support zone. So I think I would look for some kind of a pullback from those levels. In case that doesn't happen, then I think the 200 average, which is around 16,990, that would be tested. So 17,000 then becomes the next area. So I think the market might make one low over here, though the direction will be choppy, the movement will be slightly volatile, and on the upside, you will see strong supply coming in case any rally tries to get past 17,450, 500. So let's fix that as the upper end of the range in the short term and around 17,150. Or in the worst case, 17,000 as the lower end of the range. So try to explore buying opportunities around those levels. But otherwise, we've been trading with more of stock-specific bias.
Okay, and on the Bank Nifty, Mitesh, those levels?
Sorry, on the Bank Nifty?
Yes.
So on the Bank Nifty, Anuj, I think the key was that it made a fresh weekly high and then it's broken below that. So this 40,000 and 40,350 now become two important pivots on the upside. I think in the short term, any pullback to those levels will see supply and profit booking. And on the downside, 39,100 is the first support area. In case you break that, then I think the correction could deepen, go to about 38,500.
Let's talk about individual stocks then. Mitesh, let me begin with you. What are the stocks on your radar for today on both buy and sell side?
Only sell side calls today. All sell calls. Bandhan Bank is a sell with a stop at 285 for targets of 262. Couple of fertilizer names. GNFC is a sell with a stop at 682 for targets of 635, and Chambal Fertilizers, that's a sell with a stop at 336 for targets of 312. And JSW Steel is the final call. It's a conditional call, but I think it might open below that level. So sell below 665. Keep a stop at 680. Look for targets of 630.
Okay, and Sudarshan, what are your stocks?
Well, they're also primarily intraday short sells, but there's one buying idea, and I'll start with that. That's Asian Paints. Asian Paints has been an outperformer versus the index now, and it's now just showing rising momentum. It's been sideways. It has never corrected. That could be a positional trade opportunity. So consider, once prices stabilize on the Nifty, consider buying Asian Paints with a stop under 32.30. It's not an intraday trade, but so what? It's worth looking at. Godrej Consumer Products is an intraday short. The stock is now on the verge of confirming a bearish head and shoulder. Its stop loss is 900, above 900. Anuj, you'll have to adjust stop losses depending on how the market's gaps down. Hindalco is another short sell. It's broken down support levels, looking much lower. Stop loss is 405. And ICICI Prudential, another one of those confirmation of head and shoulder, bearish head and shoulder on the verge of that. It's a short sell intraday with a stop above 556.
Right. Thanks very much, gentlemen. Great to have both of you here. You know, Anuj, by the way, the big move happening in the pound. Pound lost earlier today almost 5% in a single session. I mean, for a currency that is as big as they come. 5% is down 3% now. And on Friday, we saw a very large 3.5% sell-off by close. And I mean, of course, you know, when the bond markets in UK open later today, maybe there'll be continuation. I mean, the gilts and bond yields basically just completely sort of yields went up and bonds collapsed big time. That's basically the pound dollar that we're looking at. It's down 3%, almost 3% now. It was down 5 earlier. Actually,
I think it's
trading
a record low as well for the pound.
yeah, it should be. It should be.
That's why, you know, Sonia was planning the UK holiday, you know, Friday. So, you know, I was wondering, you know, so why is that? So maybe because of that. But yes, you know, the way UK bond market was moving. As I said at the start of the show, it was normally not a big developed market. The bonds don't move like that.
Anuj, the UK 5-year gilt, the yield went up 51 basis points, right? I mean, actually, the UK 10-year is now higher than the US 10-year for the first time in almost a decade. So just incredible one-day moves. Now the second day running, maybe we'll see. I mean, I don't think it's long before we'll see some kind of policy intervention. Maybe the BOE in the market with something. One doesn't know. We'll see. We'll take a quick break here. We are back, the pre-open, but also we'll have B. Ramesh Babu of Karur Vysya Bank to talk about the bank's growth and business outlook. Stay tuned. Okay, welcome back. Just a minute to go for the pre-open session. The first rates will appear on your screen shortly. Chandan Tapare is derivative and technical analyst at Motilal Oswal Financial Services. Chandan, good to have you with us here. Thank you very much. I mean, it's going to be a lower start as the SGX indicated. The pre-open rates are also now starting to show that. First rates on your screen. But what after and what kind of trades should one take now?
Good morning, Prashant. The earlier Nifty was moving in between 17,442 to 18,088 zone. But now on last trading session, it broken that level decisively with built up of short position and huge call writing. At the same time, the FI's long short ratio has gone to 20% and your India VIX is approaching to 20 levels led by weakness in the global market. So now the range which was in between 17,442 higher zone is going to shift lower towards 16,800 on the lower side. So looking at the same, we believe that now 17,442 could act as a hurdle for the downside decline towards 16,800 levels in the Nifty index. Similarly, the Bank Nifty index, which recently made the new lifetime high of 31,840, has seen the huge short built up with long liquidation in many banking stocks. It was moving in a rising channel, but it has broken below the same and also fallen below a key important moving average. So now the 40,250, which earlier used to act as a support, is going to act as a hurdle, and downside we are opening towards 38,888 level. So earlier support in Nifty and Bank Nifty now going to act as a hurdle at 17,442 and 40,250 in Nifty and Bank Nifty respectively. Now looking at the stock specific approach in this market, one need to understand.
Chandan, wait a minute. I'll just come to you for stock specific ideas. Just want to make a point here. The dollar rupee is opening very sharply lower. 81.54 is a very sharp decline. This is coming on back of what happened on Thursday and Friday already. Once 80 caved in, and the chatter was that the RBI had spent a lot of sort of dollars to defend 80, and it almost became a futile exercise. So, once 80 went, after that it just sort of perhaps triggered some kind of dominoes impact or whatever. And from 80 to 81.5 now, the move has happened in actually less than 48 hours in terms of the trading moves. So this is a big move happening on the dollar rupee, 81.52. The reason that's important is because it leads to those algo trades where financials become weak all of a sudden. And sort of IT relatively holds out, though of course IT has its own issues. So in that sense, it will be important to see the actual market opening. Sorry, Chandan, go ahead with your stock ideas.
Thank you, Nigel, for updating the dollar, because actually that is the reason that Indian market is behaving and FI's flow is turning on the sell side. There are two concerns in the Indian market. First, the FI's low, and that second is the dollar index and the USD INR. So because of that, some downside is opening in both the indices, and one need to be stay cautious in the market for next couple of days. Looking at the stock specific, most of the stocks are looking weak. If I look at the entire 195 FNO stocks, so recommending to sell on AU Bank. This stock has given a breakdown of the consolidation band of last couple of days. Shorts were added with call writing activity. So recommending to sell on AU Bank with a stop loss of 655 and expecting it to go down to our 610 level. We have negative view on the most of the metal name. So recommending to sell on Hindalco, which is making lower top, lower bottom. One can sell with a stop loss of 408. Stock has potential to go down to us 380 level. Only one buy idea in this market, that is buy on Sun Pharma, because earlier this stock was finding hurdle near to 900 zone. Now the same started to act as a support zone, and being the pharma, some sort of resilience or buying defensive nature could be seen. So recommending to buy on Sun Pharma with a stop loss of 895 and expecting it to move to us 965. So on cautious note, only one buy, two sell, and weakness in Nifty and Bank Nifty index.
Okay, thanks a lot, Chandan, for that. Well, it's looking pretty weak in the pre-opening rate. So the Nifty is now down 212 points. It's a sell-off across the board. So ICICI Bank, Reliance Industries, Kotak Mahindra Bank, M&M, JSW Steel. I guess profit-taking would be, the order of the day, given the kind of global mayhem that we're staring at. But let's talk about some stocks that are in the news. Samvardhan Motherson has announced its first acquisition in Japan. The company will acquire the mirror business of Ichiko Industries in Japan. Now, this acquisition is for a sum of 5.2 billion yen. Now, the intention is to buy the automotive mirror business of Ichiko in both Thailand and in Malaysia. And the targeted business that they're buying has a revenue of around 15.8 billion yen in the year gone by in 2021. Now, Ichiko is the leading manufacturer of automotive mirrors in Japan, has 3 manufacturing plants in both Japan and China, and they cater to the OEM market over there. If you look at the earnings, though, it is an EBITDA positive company, but the earnings between FY19 and FY21 have sort of fallen. If you look at it, in FY21, it's gone down to about 15.8, and FY19, it was 22 billion yen. So in that case, it's a downtrending revenue, but on the EBITDA front, it's still EBITDA positive. I think the rationale behind this is Japan, as we know, is the 3rd largest automotive manufacturing hub in the world. So Samvardhan Motherson now gets an inroad into the Japanese market through this. And this is the 3rd acquisition that Samvardhan Motherson has made as part of its 5-year plan. So wanted to just get Gurmeet Chadda on board. Gurmeet, you've been tracking this stock very closely. It's not done much for investors, to be honest, over the last many years. But on this acquisition, any thoughts?
No, positive. I think they're clear leaders in this space, both especially in rearview mirrors. If you see last Q1 also, they had a good revenue growth, but it was a cost pressure which got to them with the EBITDA margin almost at about 6%, which was soft. I think at some point of time, I think this if they can improve the margin profile. Also with this new reporting structure, there was a lot of complexity as far as Motherson was concerned. And that probably reflected in these stock performance. So continues to be in our radar, but I relatively continue to like Uno Minda more over the long.
Okay, all right, Gurmeet, stay with us. We'll just we have an interesting management now with us. You may want to listen in as well. So, Mr. B. Ramesh Babu is Managing Director and CEO at Karur Vysya Bank. He's joining us to talk about, how the year is looking like. The bank's net interest margin is at a 13-quarter high. Loan growth is the best in 17 quarters. Mr. Babu, great to have you with us here. Thank you very much. And we have, the sell side analyst community calling you the best top small bank in the out there, just in terms of prospects and how things are lined up. So let me ask you about prospects, sir. Are net interest margins at these levels sustainable? They're already at, a pretty high level, nearly an all-time high. What's the outlook from here, according to you?
Yeah, there are two aspects we need to look at it. One is our cost of deposits is one of the lowest. So agreed, because the interest rates are moving up and all, it will go up. But our loan book, if you look at it, 85% is on floating. So 30% is on the EBR. Already we started passing it on, and rest also will be passed on automatically. So that way it's a pass-through. What all growth is going to come in the liability side, the rate high that will be passed on. But another thing also we need to see. So it will be staggered as far as liabilities are concerned. Whereas assets, we can pass it on immediately. So that way, we are reasonably confident that a 3.75 we will be able to manage. So that's why we have been giving a guidance of 3.75.
Okay, sorry, 3.75.
3.75 plus, yeah, that's what we are thinking.
Okay, you said 35% is on external benchmark.
Yeah,
and 85%. No, is the entire pass-through going to happen without a problem?
It's a matter of hardly here and there, around 5-10%. There may be some sort of a negotiation. Otherwise, majority of the people we are able to pass it on.
Okay. I wanted to talk a little bit, Mr. Babu, about the loan growth. It's been very impressive at a 17-quarter high for you. What is driving the loan growth for the bank, and what is the way forward? I mean, what could an average loan growth be for the full year?
Yeah, earlier we were focusing on one other vertical. Maybe the corporate was the main vertical which was pushing us. So later we have changed our model. Now we have given focus to the retail as well as the commercial also. Agriculture is also doing well. So that way now an inclusive growth has come from all the verticals now. So it started supporting us. That way overall, if you look at it, we gave a guidance of around 15% for the loan growth, but it is a long-run process. Last 2.5 years, we have done a lot of homework for creating this base because we need to grow safely, not just growing. That is the reason. On the other side, if you look at it, our asset quality also has been improving, including SMA+. So we want to grow sustained basis consistently and safely. With these things, agriculture, retail, and commercial, these are the focus areas, and the corporate also. In our case, corporate is considered as a mid-corporate. So we are growing there also. At a lower level, we grow there. And rest of the three will be growing at 15%. That's the plan of action.
So 15% overall is what you're looking at. And in agriculture and retail as well, the breakup is that you're looking at a 15% growth at the individual business level.
Yeah, absolutely, absolutely. Now, that way, as I Sonia, if you look at the asset quality also, as I said, the SMA 30+. So it is less than 1%, and the last 4 quarters, we are able to manage the net negative slippages. So that's what's happening. And the slippages also, the guidance what we have given is, it is the 1.25 to 1.5, which used to be 3.5 at a point of time. Likewise, the credit costs also used to be 2.5, which we are bringing it down to 1%. Because of the collections we have strengthened and the sensitization happened at every level, every vertical. So if you look at it, our March 31st, our corporate SMA 30+ is 0. Okay. So that way earlier it used to be a big pain for the bank and all. So we have cleaned up the corporate, rest we will be able to manage. So with this confidence, we thought that we will be able to maintain the exit quarter ROA of 1.2 this year.
Mr. Babu, how's competition? You know, gold loans are about 25% of your book, right? And we've been hearing generally, past growth rates coming off sharply for other players that we speak with regularly as well. Can you tell us?
Yeah. Gold loan 25% is there. If you look at it, majority of the gold loans are coming from the agriculture sector because south there's a lot of demand is there and all. Many of the farmers, they look for the delivery and they have the confidence on the bank, the way we treat them and all, the turnaround time and all. With these things, on an average, if I can tell you, around 16 to 17% we are growing in the gold loans, and more or less like much better than the earlier years. So we are doing some one more initiatives. Retail segment also offers good gold loans scope and all there, but we are doing just like that the branch model and all. So we are trying to have a structural changes there also because the yields are relatively better. In a methodical way, we want to go for that. Next quarter, we are going to plan for that.
So, Mr. Babu, one of the risks which is being highlighted, not really a risk, that your term ends on in July 2023, and of course, I mean, there's no reason why maybe there's an extension will not come. It should come. But any thoughts at all you can offer on that? I mean, how are...
No, you understand one thing. The organization has a neat and strong and robust hierarchy. So every level, the heads are pretty good and all, they'll be able to manage. It's not a one-man show as it is, because every vertical, when it is contributing, that itself shows the strength what all the organization has. So that way, though it's a July 23 is my time and all. So still 1 year time is there and all. It's for the board and to take a call on that. So we need not worry on that particular point. Bank is very safe, and all of us in a unified direction, we are trying to focus on the all-round growth of the bank.
All right, Mr. Babu, thanks a lot for joining us. Let's take the 9-10 cost. Then the pre-open has settled 171 down on the Nifty, 518 down on the Bank Nifty. Sudarshan, is this going to be no trade zone for the index, and what's your 9-10 call?
Yes, this big gap down is a no trade zone, and Hindalco is an intraday short with a stop above 405.
Hindalco. By the way, there was a flash on Axis, making a strategic announcement today, so we'll watch out for that stock as well. Mitesh, what are you going with, 9-10?
Yeah, I will choose a sell on Bandhan Bank, keep a stop at about 285 here, look for targets of 262.
Okay, some stocks are bucking the falling trend. Samvardhan Motherson is in the green this morning, up about 2% on the back of the acquisition. So just keep that on your radar as well. But let's get you some more stock action then. M&M Financial is what we're looking at this morning. Abhishek is here to tell us why. Abhishek, over to you.
Well, Sonia, the stock was down 13.5% on Friday. The top F&O loser on that day. Delivery volume was around 22%. Total trade volume was around 852 odd crores, which is the highest that you are seeing in last 3 months. So we have a bull and a bear scenario over here from brokerages. So Morgan Stanley is the bull, who has an overweight rating, target price of 225 per share. They say they have cut the EPS forecast given the fact that there will be lower net interest margin and higher credit cost or NPA provisions. RBI's ban is likely to cause higher provision in FY23 with reversals in future. So net impact may be on the lower side. However, fears of moral hazard and macro volatility could weigh on the stock price in the near future. Jefferies, who are the bears in this case, underperformance rating with a target price of 155 per share. They say that the RBI ban could lead to a drop of 75 to 80% in repossession activity. This could mean higher loan loss that they have to undertake in their balance sheet. So a 5% higher credit loss or loan loss could lead to 10 to 15 basis point impact on the credit cost. Back to you.
Abhishek, thanks a lot for that update. So that's on M&M Finance. Let's now count down to the market opening. The Bank Nifty is underperforming once again. It fell more than 1,000 points on Friday and another 500 points today. So it will be interesting to see, how that one opens. The 50-day exponential moving average is at 38,750. Okay, the first rates are in. The Nifty is down about 162 points, 168. The Bank Nifty down close to 500 points. So it is actually opening in line with what the SGX Nifty was telling us. Let's look at some other names then and how things are moving in terms of individual names. You have Hindalco, which is the biggest loser, down about close to 3%. So that's a stock that you want to track. Power Grid, HDFC Life, JSW Steel, IndusInd Bank, Reliance, Mahindra and Mahindra. These are a few of the names which are down. UPL and HDFC are the others where you're seeing some bit of decline. Tata Steel, Adani Ports. The Nifty is cutting its losses though now, down about 135 points now. Okay, the moment I spoke, it again became 155. The Bank Nifty is down about 439. On the way up, crude's correction may be helping BPCL. Britannia is a bit higher, Asian Paints and Nestle. So once again, FMCG is showing pockets of outperformance, but the Nifty is still at 17,158. So very interestingly poised, and the Bank Nifty down about 500 points, Sonia. Over to you.
Absolutely. The mid-cap index also, it's quite an ugly start, Anuj. So down over 400 points right now. The advanced decline ratio not looking good. There's no real trend. You're just seeing a sell-off across the board, right? So a lot of banks. Karur Vysya Bank is down 3.5%. Bank of Baroda, South Indian Bank, Union, M&M Financial, Federal Bank, RBL Bank, IDFC First Bank, South Indian Banks, PNB, Yes Bank. So the financials are really taking it on the chin. The Bank Nifty is now down almost 600 points. But it makes sense to talk about some stocks that are in the news. Motherson, after acquiring its first company in Japan, is slightly bucking the trend, down just about %. Axis Bank, there's a strategic announcement later today at noon, so just keep an eye out on that. Coal India has signed an MOU with 3 major PSUs for coal to chemical products, so that one's not as bad as the rest of the market. Natco Pharma has launched NatGen, so there is some positive trigger over there. PI Industries, keep that in mind. The promoters have sold about 10 lakh shares, so that might also be on the radar. Sterlite Tech, the CFO has resigned, so that may put further pressure on Sterlite Tech. And a couple of other names. Suzlon is now down about 6.5%, so a lot of vulnerable names are getting hit on the chin quite bad. The Nifty is now down over 200 points. Britannia, by the way, is looking pretty good as, the core team has been strengthened further with Varun Berry taking over as MD and Rajneet Kohli coming on board. So Britannia is the only one actually bucking the trend, but rest of the market under pressure.
Absolutely, Sonia, under pressure. So Power Grid will come up on your screen. It was down 10% on Friday. It's down another 4% right now. It's coming up as the top traded stock. That's Power Grid 194. IndusInd Bank is down 3.5%, and we were talking about that earlier. So giving up some of the outperformance, but it's done so much. Hindalco is down about 3.6%, 382. KPIT Tech is down 3%. KPIT Tech did very well last Thursday and Friday. Deepak Nitrite is down 3.25%, 3.33%. Karur Vysya, again, from mid-July to last week, from 45 to 80, 85, it's giving up some of those gains. NMDC is down 3%, Varun Beverages is down 4.5%, Jindal Steel is down 3%, Cummins India 3%, and so forth. So that's basically what we have. 8:1 declines to advances is the kind of screen that's out there at this point in time. HUL is up 1.34%. So FMCG did well last week. The Nifty FMCG index was up, I think, 4%, 4.5% Friday to Friday. Britannia, HUL, Nestle is up a little bit, just 1/3%. Marico.
Even Prashant, sorry, the palm oil crash, I think, is also helping.
So so I mean, that should help, that entire space as well. Marico is another one which is up just a bit. I mean, 0.4%. So, I mean, just maybe places to hide, but for what it's worth, that space is up 0.5% to 1.5% or so. But this is an overwhelmingly lower kind of screen that we have on our hands right now. Pramod Gubbi is joining us now. He's co-founder at Marcellus Investment Managers. Pramod, great to have you with us here. Thank you very much. So finally, some sheen coming off with, there is a lot happening, right, Pramod, globally. Lots of countries are having their own issues. Currency markets seem to be in a bit of a turmoil, etc. So natural to expect, these kind of days as well, where the market runs up quite a bit, outperforms and then kind of catches up a little bit as well. Are we in one of those phases, in your opinion?
Yeah. Hi, Prashant. Thanks for having me. Yes, I think it's just a reflection of the uncertainty even on behalf of the policymakers. If you've seen the recent past, the central banks have made sort of confusing statements as far as the market was concerned. And that's reflective of the fact that I don't think anybody knows how much of monetary tightening, how much of rate hikes is actually required to bring down inflation, given that the sources of inflation itself is a bit mixed together, both on the demand and supply side. Supply side is beyond monetary policy's reach, but at the same time, what the Fed and the central banks are trying to achieve is bring the demand down to the level of the current supply curve, so that we bring prices in control. And the fact that how much of this demand destruction is required is, I don't think, anybody's guess here. So therefore, it is a world of uncertainty. We don't know when interest rates will stop rising, when inflation will come under check. And markets, tend to swing on either side of the equilibrium at times like this. So therefore, I think we should be prepared for bouts of volatility like this. The market will try and seek certainty, which is elusive, and therefore volatility will be the order of the day. I don't think there are any easy answers to this, which makes it all the more reason I think investors should look at fundamentally strong businesses to play this market. I'm not saying from a short-term perspective. Everybody's exposed here, but that's the whole point of equities. Equities is a long-dated asset class, and investors should be in equities with a relatively long-term horizon. And if you can afford that long-term investment horizon, best to be positioned in fundamentally strong businesses, which can take these bouts of volatility much better in this stride, and perhaps actually gain from these adversities. As both inflation and higher interest rates affects weaker competitors, companies which can withstand this with stronger balance sheets and stronger pricing power will emerge out stronger with a larger share of the market at the end of the adversity. So this bout of volatility is going to sustain, and all the more reason you need to be looking at fundamentally strong businesses.
Fair point. Pramod, hi, good morning. So, you normally tell us that you don't take large market calls. You focus on bottom-up stock approach. So any fresh ideas that you or your team may have identified, which you might be looking to sort of, or may have already added or looking to add at current prices?
Well, Anuj, we don't make that many frequent changes. We are in some ways creating portfolios which are prepared for adversities. We look at long history of businesses which have gone through multiple cycles and withstood these adversities and come out stronger. So we're not creating these portfolios expecting a certain market situation. We are prepared, because the whole philosophy about is about protecting the downside. And if we indeed manage to sustain these or survive these crises, we'll be able to get the upside as well. Given that there are very few changes that we normally make in the portfolio, the most recent change in our Kings of Capital portfolio has been the addition of ICICI Bank, where where we've bought it for our clients, and all of us at Marcellus are investors in the same portfolio as well. We reckon there has been a significant change in the risk appetite of the bank. It's been run more conservatively. In any case, the retail aspect, both the liability side and the operating and the technology side of the bank, was pretty strong. Fixing the asset side and the prudence of lending culture means that this bank is set nicely for the next decade or so in terms of market share gain, which is part of the consolidation theme in Indian banking. So that's been the one major change recently. Otherwise, the portfolio remains fairly stable.
To be fair, ICICI Bank has had a very good run, right? It's outperformed the market. It's up 18% this year already. And it has showcased its dominance, at least by way of its earnings. Any other changes that you've made? You said this was the big change, but any other changes to the Kings of Capital portfolio, either, in terms of a sector, a big trend, a theme that you like?
So, no, I think this has been the only addition as far as Kings of Capital is concerned. There have been a couple of exits, both from the capital market side, both were plays on financialization of savings. HDFC, AMC, and ICICI Securities, while we think they are fundamentally good companies, we think the industry structure is sort of deteriorating from a competitive intensity, entry of new players, which is reflecting in pricing and yields in both of these businesses. So while market share remains fairly stable, the deterioration of yields and hence the attractiveness of the business from an industry structure standpoint, we exited those. Otherwise, Kings of Capital remains pretty much stable as a portfolio.
Pramod, you own a bunch of chemical names as well, right? What's happening there? Are price, like what we're seeing in many other sectors, are prices coming back in many areas back to pre-COVID kind of levels? I mean, generally, what's the trend overall?
No, I think chemicals, there's a structural tailwind happening in terms of shift in production from China to India, which has been happening even before COVID, actually. I think there'd been a crackdown in emission norms in China. So even prior to COVID, you saw that shift in sourcing from Western buyers in certain aspects. That trend has only got accelerated with COVID, where the supply side challenges meant that Western buyers would look for alternative sources from a supply chain perspective. And on top of that, the emerging geopolitical situation means that's got even more accelerated. So the demand side tailwind is pretty strong for the industry as a whole. Within that, I think there are different types of chemicals. Some are more commoditized, where there's no source of competitive advantage, and hence we tend to stay away from. But there are a few areas where there are competitive advantages, either from the perspective of strong R&D or chemistry skills, or in the form of natural entry barriers, because these are heavily regulated industries. Some of them are harmful, and hence it's very difficult to get into the business because of the regulatory permissions required and so on. So a combination of those is what interests us. We have invested in companies like alkyl amines, Fine Organics, Galaxy Surfactants, Poshak, across our portfolios in small and mid cap. All of us, including myself, are customers or investors in the same portfolio as well. We reckon these demonstrate those characteristics of significant pricing power, significant entry barriers, and we will tend to benefit from this structural tailwind on the demand side. Yes, in the short run, there were headwinds in the form of input cost inflation, but that we see already abating. We're already seeing raw material prices across, whether it's crude or other commodities, already coming off, and that'll begin to show in terms of margins coming back to normal levels for these companies. So the long-term benefit of demand tailwind and the short-term reversion to mean on the margin side should mean that earnings and free cash flow growth should be pretty strong for some of these companies.
Okay, Pramod, do you have any investments in housing finance as a sector? Any stocks here? That's in focus once again after what happened to Canfin Homes, for example.
Yes, we do own Aavas and Home First in our financials portfolios, and we're quite positive on the long-term characteristics of this. Remember, both are not just housing; they're mostly operating in the affordable housing segment. This is where we believe that the competition from banks are naturally equipped with better cost of funds, and hence tend to be competitive in the prime mortgages segment. But in the affordable housing segment, where banks still lack capabilities in terms of sort of assessing the risk of the borrower, because these are not typical borrowers with who can be assessed using digital means or data. You need specific risks to assess, specific skills to assess the risks of these borrowers. At the same time, it requires significant focus or distribution reach into specific territories. So there are players like Aavas and Home First, which have built significant capabilities on these two fronts. And we reckon there's a long way, given the nature of housing evolution in this country. There's a long way, particularly in the affordable housing segment, in terms of demand to capitalize on these trends.
Okay, one more space that you like, and I notice is present in your Kings of Capital portfolio, is insurance. You like ICICI Lombard. I don't know if you still have it, but it was a strong set of earnings, that the company has been reporting for the last few quarters. There's a very healthy growth in their premium income. Want to understand from you, is this a structural story, or is it something that you're just bullish on for a specific time period? And what are your thoughts on the sector as a whole?
I mean, we generally take long-term bets here, and ICICI Lombard is no different. We believe there is a macro story in terms of penetration of general insurance across motor, property, health insurance. Penetration levels are still relatively low, so that's the structural tailwind on the demand side. But it's also fairly consolidating industry. You've seen significant M&A, significant exits in terms of players. So there are fewer and fewer players. The competitive intensity is getting better. Yes, there is competition from a couple of fintech players, which we don't think is sustainable as far as pricing is concerned. So to that extent, ICICI Lombard being one of the oldest private sector general insurers in this country, with a dominant market share, has all the capabilities in terms of being a beneficiary of the consolidation that we are seeing in the sector. So the demand side is quite structural, which is aided by the sort of competitive advantages some of the incumbents have built. And that results in consolidation, which should give disproportionate benefit of the earnings level. But it is a structural story. We're not here in general insurance for the here and now.
Okay, it's a structural story. Got that. Thanks a lot for joining in, Pramod. All the best. And hope to speak to you very soon again on the markets, which, by the way, is not too bad. There was an initial sell-off, but now the selling pressure is arrested, at least for now. The Nifty is down about 190 points. The mid-cap index is still down 650 points. So give and take after the initial gap down, the market is volatile, but it's not gotten incrementally worse.
It's not, but it's expiry week, Sonia. Yeah. My sense is, this is going to be one clean-out market. I think too many people have just assumed that the market is essentially buy on dips, and I think maybe in this week the Nifty does test its 200-day moving average at 17,000. And the exponential moving average is 16,900. I think 16,900, 17,000 perhaps gets tested because the way currency market is moving, not just in India, globally, this is not your normal correction. This looks something more sinister. So, but let's see. For now, it's not a collapsing market, as you said, for sure.
Okay, at least for now, it's not collapsing. Let's see how it goes through the course of the day. But let's talk about some companies now. India Mart is the company on our radar. About a month back, they were present at the Edelweiss India Singapore conference, where they spoke about, increasing the supplier base, the paying supplier base. And they're confident of adding 8,000 to 9,000 paying suppliers every quarter. So we're just trying to get a check on how the business is shaping up for India Mart. Dinesh Agarwal, who's the founder and chief executive officer of India Mart Intermesh, joins us now to talk about that. Dinesh, good morning and thanks a lot for joining in. I want to first start by talking about the festive season because it is upon us. Any pickup that you've seen in inquiries and paying customers? Has there been any big spurt in B2B customers, say, in this quarter so far? If you can just share some numbers with us.
Yeah, I mean, quarterly numbers would be out in due course of time, but as much as I can tell you, as I told in the July also, that April, May, June was specifically bad during the war and during the inflationary problems. But now I think that is behind us to some extent. And we are seeing recovery in the inquiry and recovery in the customer addition, everything.
Quantify that a little bit with some numbers as compared and where you were at the end of the last quarter. What is the situation now so far?
So last quarter, we ended the customer base at 179,000 paying customers. And we have been adding about 8,000 to 9,000 customers per quarter now, as against 5,000 to 6,000 that we used to add pre-COVID level. And we believe that given that the economy has now opened up completely from COVID, I think our sales and service forces are completely on the ground. So we are confident that 8,000 to 9,000 supplier base should be possible every quarter in the coming few quarters.
Sorry, in Q1, your paying subscribers were 10,000, right? In the quarter?
Yeah, it was about 9,900.
Okay, 9,900. So this was compared to about 13,000 in Q4. But this is, I think, higher than the 8,000 to 9,000 run rate that you've been guiding for. Is that this 8,000 to 9,000, is this a level that you will maintain through the course of the year of paying subscribers?
Yes, I think that 13,000 was the aberration because we just opened up our sales force and everything, and quarter four coincided, and quarter four is generally very high quarter for us. So that is why 13,000 is specifically aberration. But from 5 to 6,000, we are maintaining our guidelines to 8 to 9,000.
Okay, and in terms of inquiries, the number of inquiries has dropped. In quarter one, I think it was 115 million. You had a range of about 150, 160 in the preceding quarters. What will the average look like?
Yeah, so look at the daily business inquiries, unique business inquiries, that were 22 million. They used to be in the range of 24, 25 million. And we believe that we should be back to 23, 24 million in the coming quarters or so. In terms of total business inquiries delivered, as I had told earlier also, that we are now making certain algorithmic changes that not every unique buyer is required to be matchmade with 6 or 7 suppliers. Now we are able to do the fulfillment within about 5 suppliers only. So that is why you are saying total business inquiries delivered come down to 120 million or so, and that will remain like this.
You know, so revenue growth, what's your expectation? 20% plus?
Yes, I think I guided earlier also that this particular year, because if you see our revenue comes from the collection from operation, and collection from operation has been growing at a healthy pace in the last couple of quarters, especially because of the low base effect as well as increase in the supplier base. So I think we will continue to maintain 20+% of revenue growth.
Okay. You know, I have to ask you about competition because quite a bit of it has picked up with names like Udaan or even with Just Dial, right? Can you help us with how you're sort of combating competition? Also, what is the market share currently? Has it been eroded because of the rising threat?
I think we are gaining market share as the B2B is increasing. And Just Dial has been completely into the consumer services kind of business, which is not our forte. And Udaan, the name that you took is mostly FMCG distribution, which is again not our forte. Our forte has been mostly the engineering products, medical products, and those kind of products. And there we are, I think, gaining market share slowly and slowly.
So gaining market share, how much is it now?
We haven't done any study so far in the recent times because of the COVID. I think we will constitute a study to find out the exact market share now.
Okay. Can you tell us, any M&A plans that you would have? I mean, post the fundraising and the buyback, etc., you have about 100 crores on your books in terms of cash, if I'm not wrong. Would you want to deploy that in any way, either in terms of any acquisitions or through the inorganic route?
We recently completed Busy Infotech acquisition at 500 crores, and that was completed in quarter one beginning. And we are trying to properly integrate that company properly into our systems and operations. And we have about 2,000 crores of cash now on our books. And we will continue to look for investments and M&A opportunities as and when they emerge.
Sorry, just one follow-up. Because this capital allocation policy has caused some concerns with analysts because of the expensive nature of the acquisitions. Can you tell us these recent acquisitions that you've done, how are they faring so far and what is the prognosis?
Yeah, so if you look at Busy, it is only 1 quarter of the results that we have done. We have done fairly okay with that. And technology stocks technology companies are always a little expensive when you buy them. And when you only look back, if you are able to successfully grow them, then only they look cheaper. So I think.
All right, we'll leave it there. Thank you very much, sir. Appreciate you joining in and running us through all of that commentary, a little bit of outlook there. Thank you very much for that. Well, the market, of course, is the big story, which is down 250 points. So there are these attempts occasionally which are happening at a bit of a rebound. I mean, one big one was, of course, from the low, which was made at about 920. The price was about 17,080. We came up to about 17,200, and we are now in a very swift way going back to the lowest point of the day. I think, yes, we've made a low for the day once again with this second leg, which is appearing. So 250 lower on the Nifty, 17,075. We'll take a quick break here. We have the management of Stovecraft, Rajendra Gandhi, join us.